So in this video, we're going to talk about short-term rentals, or STRs for short. Now, a lot of people refer to them as Airbnbs, which I think everyone knows, what that is. That's the service that helps a lot of people find the short-term rental properties, but VRBO and a bunch of other services are out there as well. But Airbnb is a common one, and it's kind of like Kleenex and tissues. They often get switched out in vocabulary. I definitely do as well. So let's talk about the deal spectrum on here, the spectrum for investing in a short-term rental. And to define a short-term rental, they are 30 days or less. That is typically kind of a textbook definition for what makes a short-term rental a short-term rental. Now understand that a short-term rental guest has different, they abide by different rules and regulations than a long-term tenant. So make sure you understand that as you go in here, and if you do rent out a short-term rental, you're going to spend a little more time learning about short-term rentals and the rules and regulations for your local market. Deal availability, generally I say these are pretty good for deal availability. We find clients short-term rentals about every single month out there. Vast majority we find off the MLS as well. Again, these are relatively pretty good deals in the top 10% of the market out there that we can find, but they're out there, and that's something your agent and your lender can help you find and finance. Time. Depending on how you operate the short-term rental, it may take a lot more time versus not, because you are running a hospitality business. Keep in mind, I said you have a guest, not a tenant. That guest is there for a vacation, to go skiing, to go to the beach, or there for work for a couple of weeks. Whatever it is, they're in there, as a guest. And I'm sure a lot of you have been to Airbnbs and can relate to it. So you're gonna have to spend a little more time up front to learn about it, learn about the rules and regulations. And if you self-manage, it will take a lot more time for you to self-manage, and you can automate a lot through systems and resources, but you are running a hospitality business. There's also usually a lot of property managers out there, not as many as long-term rentals, but usually quite a few property managers in markets that have a good short-term rental market. Where you can go out there and hire a property manager. Now, a lot of times their fees will range from like 15 to 30% of the gross income you get off of there. But again, they are running the business for you. Skill. Again, depends what you're doing. If you're hiring a property manager, you don't need a lot of skill to do it. If you're going to self-manage this, you're going to have to spend more time and develop the skill set and the automated replies on Airbnb and create the guest books and all that stuff. Again, it's very doable, and there's lots of resources on the internet, and also probably your local agent has some great resources for you. But understand you will have to invest some time if you want to operate it yourself. Risk. There is some risk here to short-term rentals. I go back to thinking in Denver, Colorado, it was like 3 or 4 years ago, a bunch of people had short-term rentals in Denver, in the city and county in Denver, and then they passed a rule where they no longer allowed investor short-term rentals. It can only be a primary residence short-term rental. So a lot of these landlords who had short-term rentals, they could no longer do a short-term rental. So they had to pivot. And some went to medium-term rentals, some pivoted to long-term rentals, and some just sold because they didn't want to deal with it or the numbers weren't that attractive to them. So I call the risk medium on here. You always want to make sure you have a plan B with a short-term rental in case rules or regulations change or anything like that. What is your plan B? It might be a medium-term rental or a long-term rental. Network, again, you don't need a huge network for this because there's a lot of resources and professional services available. Capital. Short-term rentals are generally capital intensive. Not only do you have to do the down payment on the property, and if you're buying as investment, you're probably putting down 25%, but you have to go in there and definitely furnish the property, and you have to put in some decent, pretty good furnishings in there, and depending on the property, you may have to go in there and rehab it. Now, if you're gonna update the property, updating it for a long-term rental is very different than a short-term rental. If you're going to update or renovate the property for a short-term rental, guests have a higher expectations for nicer properties than a tenant does in a long-term rental. Again, very market dependent, but it does take more capital, generally speaking. Financing is usually readily available for short-term rentals. Again, your lender will have a lot of great options for you and can discuss them with you. But I call this, it can be a hybrid of business and investing. If you choose to operate it yourself, you are basically a B&B operator, a B&B guest. So you will be having some business situations in there as well. But make sure you also check out the laws at your state level and most importantly at the municipal level. Because in Denver Metro, we have 5 counties. And the counties and a lot of the municipalities all have their different rules and regulations. And they do change, so make sure you are up to speed on those and talking about that with your agent. Now, as a general rule of thumb, very few HOAs, unless you're in a vacation market like the mountains or the beach, a lot of the HOAs don't allow short-term rentals. Some do, some don't. So again, make sure you know the HOA rules and regulations for what you can or can't do on there. But your typical like condo HOA in a vacation market, they don't allow it. All right, so I'm back here in Property Llama and I'm at the same property. I'm gonna open this up in a separate window. Now I am assuming it's the same purchase price, about $590,000, same down payment, but I have a lot higher repair cost. Why? Well, because I have to go on there and rehab this property. So rather than being a $15,000 rehab, it's probably more like a $40,000 or $50,000 rehab for both units to make it a lot nicer of a property. And they have to spend, probably $30,000 or $40,000 on higher end furnishings to go furnish the place and get all that stuff in there. So it is a chunk of money to invest. So it might be $200,000 to $250,000 for this property. Again, if you have the capital for it, it can be some really attractive numbers. So let's come up here. And I won't go through all the underwriting on here. I've got the basic underwriting of rents, but you can see here the rent or the income you get from Airbnb is a lot higher than the long-term rental. But your expenses are usually higher as well, a much higher property management fee. I put a 25% fee in here. That's a $2,000 a month I'm paying for my property manager. Well, if you want to do it yourself, hey, great, come in here and you can save yourself $2,000 a month. But you are trading your time for that. So how much, what's your dollar per hour worth? Again, that's something for you to figure out. 41-year-old Chris is not going to self-manage a property. 27-year-old, young and single Chris, I would probably self-manage the property. So again, depends on you, going back to that 3-factor alignment. But look at this. We're at a much higher cap rate on the property. We're at a much higher cash-on-cash return. Why? Well, because we're getting more into the property here. We're getting more cash flow from the property. And so we're actually going to make a lot of times a higher return on there. So again, depending on the market and the property, the more you put down, you may have a higher return or you may have a lower return. This is showing about a 25% return, where the other property showed about a 19% return for a long-term rental. Again, I'm not going to go into all the details of underwriting on here. I just want to give you the high-level overview so you can understand, hey, what's the high level of this? And then you can dig in with your local real estate team to learn if it's even viable in your market or maybe in a nearby market, and if it's makes sense for your time, your skill set, and of course, your capital.